What's up everyone, welcome to Wise Wealth, where we dive into all things personal finance. Today we're bringing you episode 4 of our Stock of the Week series. In Stock of the Week, we pick a stock for any host of reasons. It may have been in the news recently, a recent earnings report may have been published, or anything else, and we break it down in a video for you. We'll take a look at any recent events that may affect the stock, what its performance has been like, and what we think it will be in the near future. The analysis will go into the financials, what it's trading at, and ultimately, do we think it's a good investment at this point in time? At the end of the analysis, we'll rate the stock out of 10 to give you an idea of it in a quick and easy to understand video. And I hope that it helps you with your own investment decisions. Now I must caveat this by saying that this is not financial advice and is purely my own thoughts on the stock and intended for educational purposes. I'd always advise doing your own due diligence before investing your own money. So welcome to episode 4. I usually try and release these videos on a Monday morning, but it's been a bank holiday here, and I also know that it was Memorial Day in the States for all of our US watchers, so the market was closed as a result anyway. If you've seen my other videos, you'll know that this is a relatively new channel. We started this series recently and have been receiving a lot of positive news from it, so thanks for that. And I hope this episode will provide you guys with some value. If you're new here, then welcome to the channel. If you're looking for content about stock market investing and personal finance, be sure to subscribe to my channel and hit that bell icon to get notified when I upload new content. Without further ado, let's get into today's video. So in today's episode of Stock of the Week, we'll be looking at Nvidia. For those of you who don't know, Nvidia are known for designing graphics processing units, commonly known as GPUs. As of this video, they are currently trading at $348.71 per share. Nvidia is the market leader in the GPU space, with one real competitor that is also a constituent of the S&P 500, called AMD. I chose Nvidia because they have made some interesting progressions in terms of their business direction recently, and I wanted to share some of those developments with you today. As a result of some of these strategic changes and positive earnings reports, Nvidia has seen some immense growth in such a short space of time, rising over 16% in the last month and over 30% in the last 3 months. Nvidia reported a strong earnings quarter for its Q1 2020, beating analysts' expectations for adjusted earnings per share. Revenue and gross margin were both slightly higher than expected. Nvidia said it is committed to paying its quarterly dividend, but is evaluating the timing of resuming share repurchases. Historically, Nvidia's business for GPU sales has come from customers wishing to run graphically intensive video games. In the recent years, however, the market for GPUs has expanded to include multiple disciplines, such as cryptocurrency mining, artificial intelligence, and professional design. Due to this, the company has significantly outperformed the S&P 500, rising over 137% in the process. Another notable event in Nvidia's recent history is their acquisition of Mellanox Technologies for a transaction value of $7 billion. This investment shows Nvidia's move away from GPU sales for video gaming purposes alone and more into their growing cloud and data center business segment. This was compounded by the segment's first $1 billion quarter. Nvidia founder and CEO Jensen Huang said, "Nvidia is well positioned to advance the most powerful technology forces of our time, cloud computing and AI." So from the recent earnings report, we can see that Nvidia's short-term performance has been stellar, and it looks to continue on an upward trajectory. How then has the firm performed over the last several years? Well, as we can see from the table, the last 5 years have seen Nvidia steadily grow its revenues to double growth. Operating profits have accelerated further than that as the company has grown over time, while earnings per share have remained somewhat stagnant over the last 3 years. This consistent growth over time highlights Nvidia as a strong candidate as a growth stock of choice in any portfolio. I recently touched upon Nvidia in my top 5 growth stocks on the S&P 500 video. Click on the icon in the top right hand corner, or I'll leave a link in the video description below if you want to check that out. The news of the earnings report meant that Nvidia's share value soared over 12% in the span of a few days. This led to the price targets for the stock increasing across the board and industry consensus changing to give Nvidia a buy status. This means that investors expect further growth in Nvidia over the short to medium term. The nature of Nvidia as a stock has sheltered it from the effects of the pandemic. In fact, one could argue that the rise of people staying at home has meant that people have turned to video gaming for entertainment, and therefore demand growth in this segment has been realized. While we may not see such rapid growth of the stock in the near term, I think Nvidia has the potential to still see growth, especially when the general consensus and business confidence looks to be increasing going forward, with lockdown restrictions set to be eased and normal business activity slowly resuming. Moving on to dividend analysis. What does the dividend usually look like for Nvidia? As you can see on the right, here is the annual dividend history over the last few years. As you can see, the 2020 dividend values are limited due to where we are within the cycle of Nvidia's quarterly payments. This gives Nvidia a very low yield of 0.09%. Even if dividends are paid throughout the remainder of the year, Nvidia does not prove to be a valuable dividend stock. However, this is not uncommon as a technology stock. Most tech firms provide significant growth over consistent dividend streams. For that reason, I would not recommend Nvidia as a dividend stock. However, investing in the firm has proven to be lucrative for capital appreciation, and the extra income can be seen more as a bonus. The dividend yield has also taken a big hit due to the rapid growth of the stock. We haven't seen the dividend grow in line with the share value. This is something to bear in mind, as we could see dividend growth to move the yield back up to around the 0.3% mark. While this isn't life-changing, it's still something. Plus, if the stock continues to see massive gains over the coming years, a low dividend yield of huge capital gains can start to add up quickly. Plus, if the stock continues to see massive gains over the coming years, a low dividend yield of huge capital gains can start to add up quickly. I believe as business activity returns to normal and consumer spending gains momentum, that Nvidia will start to provide higher returns to investors in the form of dividends. So what are my overall thoughts? Well, I think Nvidia is positioned fantastically to realize steady growth in the long term. The firm has adjusted its strategic direction in line with technological innovation. The rise of the data center, cloud computing, AI and automotive industries it is serving has yielded significant returns in the form of revenue growth. This shows that Nvidia is looking to pioneer the frontier of technological innovation rather than being a laggard. These firms tend to prosper over the long term. Look at examples of those historically that have done so, and look at those who haven't. There's a stark difference in their long-term viability as businesses. In terms of expected share value growth, Nvidia has been given the pandemic-proof status over the recent months, as it continued to perform strongly while other stocks suffered heavily. This meant that investors sought shelter in Nvidia and similar stocks, but as businesses return to normal, we may start to see a sell-off of the stock. This is why in the immediate short term, I think Nvidia's share value has the potential to decrease. However, if we are buying growth stocks for the long term, we shouldn't be concerned about this. And I think that over the years, Nvidia will continue to see steady share value growth. In terms of dividends, while they may seem insignificant, the low dividend could remain low, but we can also expect slight dividend growth in line with the share value. For that reason, I'm going to give Nvidia a solid 9 out of 10. The firm is well positioned to grow. The only quality of the stock that is not so attractive is the low dividend yield. Other than that, I think the firm is an excellent choice as a growth stock to add to your portfolio. The management team have proven that they are aware of the changing dynamic of the GPU industry and have adjusted their focus where necessary. Only time will tell how successful these rising business segments will become. I'd be really interested to hear your thoughts on this, so let me know in the comments below. What do you think of the situation surrounding Nvidia at the moment? Do you currently have investments in Nvidia and are thinking of offloading your stock? Were you thinking of opening a position in Nvidia, having seen the level of growth the stock has experienced? Thanks for tuning in today. I hope you enjoyed the video. If you found it useful, smash the like button, I'd really appreciate it. If you want to see more episodes of Stock of the Week, subscribe to my channel and be sure to hit that bell icon to get notified of new posts. I upload all sorts of videos on this channel, not just the Stock of the Week stuff, so if you're interested in investing videos, top fives, and personal finance in general, check out my channel for more, and until next time, see ya.